What's good? It's your boy, Sir Willoughby Al Willoughby. Welcome to the Stock Hustler Network. Monday Market Madness. We tapping in the Hustle House today. Thank you for tuning back in. If you haven't already, hit the like, subscribe, notification bell, and share this with a hustler trying to get in the stock market and learn how to hustle. I'm coming in real quick today, so just give you a quick breakdown. I got a few notes this morning on what we need to look at today and headed into this week, as this week's going to be very volatile with the PCE inflation core data coming in later on this week. So let's jump into it. We got the Fed back in control. We got the Fed held rate steady last week, but the Fed chair, Kevin Warsh, made it clear that inflation remains the priority. Markets are now beginning to price in the possibility of another rate hike later this year. This week's biggest economic event that we're going to keep our eyes on is the Thursday core PCE inflation report, the Fed's preferred inflation gauge. So with this PCE inflation report, the Feds look at this gauge and they actually use this in a metric on if they're going to cut rates, hold rates, or do a rate hike. So this is going to be the biggest economic data this week so far. We're going to keep our eyes on that. Then we got higher expected reading and we got increased pressure on the stocks as yields push higher. This is bullish. The bullish term for this with high yields, economy remains resilient. That's good. Financial stocks benefit higher from higher rates. That's good. But the bearish sentiment is higher rates hurt growth stocks. Higher rates hurt tech and AI names may face major selling pressure. And you got the bond yields continuing to decline, man. The bond yields still going up. We got Treasury Yields are moving higher as traders adjust to the Fed's tougher stance. Got a 2-year yield at 4%. The 10-year is at 4.5. You got the 1-year T-bill at 1.13%. Higher yields create a competition for stocks and can cause volatility in high growth sectors that have led this rally. So we're going to keep our eyes on NVIDIA, Palantir, SOFI, Tesla, ASTS. We're going to keep our eyes on big company names like AVGO, Micron, all CrowdStrike, all of these names. Excuse me for messing up the camera, man. Holding this thing up, got my arm kind of weak. But we're going to keep it moving along. So we're gonna pay close attention to the momentum of those moves heading into the to this week. We also got the Middle Eastern tension still remains a wild card. Yeah, we said that they was going to sign the memorandum of understanding on Friday, but that meeting got canceled. The Strait of Hormuz is still open, but that meeting got canceled. So we're going to really keep our eyes on what's going on with that. Markets are reacting positively to the reports that U.S. and Iran officials have agreed on a roadmap toward a potential deal within 60 days. If tensions continue to ease, then we got oil prices can move higher or oil prices can move lower. If tensions ease, oil prices will definitely go lower than what they are now. We got inflation pressure could definitely ease. So headed into July for June reports, we could see a cool down. Headed into August for July reports, we could start to see a cool down, and that'll be great. Stocks may benefit. However, the situation remains fluid, and headlines could move markets quickly throughout this week. So please pay attention to the geopolitical, what's going on. That's a lot of stuff that can weigh in on the inflation gauge when we get the PCE data. What I'm watching this week, I'm watching Thursday, the core PCE inflation report. I'm watching Treasury Yields, the movement, AI and tech, leadership in the Middle East headlines. We're keeping our ear open to the street for that. The goal this week is not to catch every move. We're playing it safe. We're going to be playing risk off this week as we head into this volatile week. By Wednesday, we should be knowing what's going on. Thursday, we will have a definitely know if we need to be risk back on going into the following week. Again, motivation plus dedication equals progression, man. I believe in you. The goal is to stay disciplined, protect capital, and let the market confirm our direction. We're not gonna be guessing out here in the market, man. So please take heed to the information that's coming out. A lot of this data will move the market. If you want more information like this, man, you want to get it before I make my videos, come on over to NexGen Traders School Community. The link will be in the top description below. Once you come on over, hop in, take the courses, figure out where you need to be. You can jump right in with us and start making some money. So all this not sounding Chinese and Spanish to you. Also, once you get to building your foundation, you can also join the classroom and options made simple course, so you can start learning options, how to trade calls and puts, where you can make money in down times when the market is falling and when the market's going up. Also, this program is brought to you by Moo. Get 8.1% return on your APY on your money yearly with just your uninvested cash sitting there. If you ain't got no platform to trade on, I suggest you use the link below. Start your Moo account, put $100 in there, get your 8.1% in for free shares when you use my link below. I hope this information brought you some good data. I hope you can keep your eyes open and be resilient this week. Man, trade with a chart, not with your heart, as my boy Kenny Gray say. If we're gonna continue to watch the data, we're gonna continue to protect our profits. Motivation plus dedication equals progression. I believe in you. Peace and love, baby. We out.